Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday the 22nd of September 2020. And yesterday we published a video entitled Why Silver Prices Crashed Below Multiple Support Levels, where we shared our thoughts as to why silver crashed through $25. And at the time of producing that video podcast, which was 1800 hours GMT plus 1, silver was standing at $24.41, some $2.43 down on the day, or 9%, and gold stood at $1,903, down $47 on the day, or 2.4%. We also quoted a Bloomberg and Reuters article suggesting essentially that this was the result of a strengthening US dollar. We particularly added, though, that we felt that the increasing coronavirus infection rates would have further impact, and perhaps even suggested that as far as silver was concerned, further business closedowns could have a significant impact on silver prices due to a further fall of demand by industrial users. Now, looking at the prices today, which is 12.50 GMT plus 1, so it's just after midday here in the United Kingdom, we can see that gold stands at $19.05, that's $1,905, so little change from our podcast yesterday, but silver's down a little further at $24.29, and that's compared with $24.41 yesterday, giving us a gold to silver ratio of 78.4 to 1, much higher than it has been in the last couple of weeks. Now, we came across a very interesting article published by Bullion yesterday. Now, it was yesterday afternoon, so the price is a little out of date, but we'll read it to you anyway because it adds a slightly further perspective to recent declines and focuses more on gold. Let's take a look. Bullion article dated Monday, 21st of September 2020 at 15:06. Headline: Gold price drops to 2011 peak as banking scandal whacks stock markets. COVID pandemic worsens. Gold prices dropped to the 2011 peak of 1920 per ounce Monday in London as the US dollar jumped while European stocks fell hard amid banking scandal allegations and a surge in new coronavirus cases across the region, writes Atsuko Whitehouse at Bullion Vault. After making a second consecutive weekly gain on Friday, spot gold prices dropped 1.4% to hit the lowest in nearly 2 weeks as the dollar index, a measure of the US currency's value versus its major peers, rose from its second consecutive weekly decline. European shares, meantime, fell the most since July as allegations surrounding bank dealings and rising coronavirus infections hit market sentiment. The Pan-European Stoxx 600 dropped nearly 3% by Monday lunchtime, with HSBC Holdings dropping to its lowest level since 1995, and Deutsche Bank AG dropping more than 7.5% as travel stocks also sank, down 4.8% to lead losses across all sectors and major bourses. US stock futures dropped sharply, suggesting that the major benchmark indices may extend their retreat into a fourth consecutive week, with bipartisan negotiations for a second COVID stimulus bill looking more complicated after the death of liberal-leaning Supreme Court Justice Ruth Bader Ginsburg at the weekend. Last week's high and unusual positive correlation with US stocks may, until it's broken, potentially see gold trade weaker, with equities on the defensive following Friday's week close on Wall Street, says derivatives platform Saxo Bank's commodity strategist Ole Hansen. Monday's slump in banking stocks, meantime, came after leaked documents called FinCEN, the US Financial Crimes Enforcement Network, involving about $2 trillion of transactions, showed that some of the world's biggest banks have allowed criminals to move dirty money around the world. A new investigation by the International Consortium of Investigative Journalists, ICIJ, says JP Morgan, Deutsche Bank and several other global banks kept profiting from powerful and dangerous players in the past 2 decades, even after the US imposed penalties on these financial institutions. Between 2012 and 2015, 9 big banks paid a total of $20 billion in fines for money laundering. Gold prices for UK investors today declined 0.9% to £1,496 per ounce, even as the government's chief scientific advisor warned Monday lunchtime that the UK could see 50,000 new coronavirus cases a day by mid-October without further action, likely including another national lockdown. That figure would be expected to lead to about 200 deaths per day a month later, Sir Patrick Vallance said. Euro gold prices were also down by 0.8% to €1,633 per ounce, as several European countries, such as Spain, Greece, Denmark and France, announced new coronavirus restrictions in some of their largest cities after recent surges in infections. The European Central Bank has launched a review of its pandemic bond buying program, PEP, Financial Times reported over the weekend, looking at how long it should continue and whether its flexibility should be extended to older programs. The ECB, European Central Bank, has now bought €527 billion of assets under the PEPP, adding to the €2.8 trillion of assets it owns under post-banking crash programs. Silver dropped further than gold prices on Monday, down by 2.3% to $26.17 per ounce, and pushing the gold to silver ratio, which tracks the two formerly monetary metals' relative prices, up further above 73, the highest value for gold versus silver in more than a month. Platinum prices also declined, down nearly 2.4% to $910 per ounce, and holding a discount to gold of $1,017 per ounce. Monday's rise in the dollar foreign exchange value, or Forex value, came ahead of US Federal Reserve Chairman Jerome Powell testifying before Congress from Tuesday to Thursday, explicitly talking about pandemic relief efforts. Following the US Central Bank's newly declared switch in inflation targeting, 6 other Fed committee members will also make public speeches this week. Atsuko Whitehouse is the head of the Japanese market at Bullion Vault and the editor of Japanese Gold News. End of article. Now, something we would like to add in addition to this article is that the likelihood of the US Congress and Senate to agree another stimulus package soon is indeed limited. And quite possibly any that may be agreed, if one at all is, it's going to be much less than many either want or predict, forecast or require. Now, this will therefore serve to strengthen the US dollar, decline equity markets further, and potentially push down, at least short-term, gold and silver prices. Any further lockdowns announced, and we're encountering more by the day in the United Kingdom, will again depress silver prices, in particular short-term, simply because of its effect on trade and industrial demand. And gold will also descend, but perhaps not to the same percentage. Having said that, the European equity markets have recovered a little so far today and are up broadly between 0.4% and 1%. But for how long, that remains to be seen. Now, it does go without saying, though, that once economic activity resumes and rises again, then silver will, in our assessment, bounce back both quickly and hard. And so, perhaps rather than be depressed about current price declines and not achieving that $50 so many of you were expecting just a couple of months ago, you should perhaps relish this moment as a further buying opportunity. And we cannot stress enough that if you decide to do that you do it with the medium term in mind and not in the great expectation of making a quick buck or profit, as we don't necessarily see that happening as we did when earlier in March silver had dropped to the $12 area. All that said, we like to think that all of us are in this together for the longer term. What do you think? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.